Hey all, good morning and welcome to ShareTreck. It's the 2nd of June 2022. I hope you had the opportunity to watch my Editas video that I dropped yesterday. If not, please have a look at it. You'll find something very interesting out there. I'm also talking about that new sleek technology. And with that said, let's get started with our daily update. Our first article comes from the Genetic Literacy Project. It's about progeria. Progeria is an extremely rare genetic disorder caused by a single mutation in one of 3 million base pairs that make up human DNA. It manifests as a rapid aging and can reduce life expectancy to 16 years. The base editor created by a Harvard team goes into the cells of the animal, looks for the mistake, which is progeria, and it converts a C to a T and changes the T back to a C and enables a cure. This has been proven in mice and now needs to be proven in humans. We should wait further news on these clinical trials. I'll keep a watch to see what is happening in this particular area, because I suppose this will be right up the alley for Beam to pick up this idea and go ahead with a cure for progeria. And most probably it's likely to be orphan drug status or something like that. So let's watch this space. The next item that I have is from CNBC. They usually publish 5 things to know before the stock market opens. So they do talk about important issues, but I have picked up a couple of the items that I want to talk to you about. One is that the oil prices fell after a report from Financial Times that they had an internal source in Saudi Arabia who confirmed to them that Saudi Arabia may increase oil production to compensate for Russian pullback in supply. So that's one of the important news that I wanted to highlight. And of course, Sheryl Sandberg is stepping down, and Elon Musk tells workers to return to work or resign. So I can understand when you're running a factory, you can't have staff sitting at home and still delivering some kind of productivity. You need to be on the shop floor to make those cars. So that's understood. But the tone of the message, the letter that Elon Musk wrote to his staff was quite insensitive in my opinion. He could have had it worded properly. You can say the same thing, but you can say it properly. Probably he came short on that, in my opinion. I don't know if you guys have not seen that. It's all over Twitter. So check it out and put your comments if you disagree with me. And there are a few other items out there. One of them that caught my eye is the White House to cancel student debt for 500,000 students from Corinthian colleges. Corinthian colleges were for-profit college. And basically what's going to happen now is $5.8 billion worth of student loans taken by around 560,000 students of these Corinthian colleges are going to be written off. So I'm thinking that is the wrong time to do it, because this is going to add to our inflation worries and also to the tight labor market situation. So that's my point out there. So with that said, I think I'd like to go to the next article, which more or less reiterates what I have already told you all from time to time. Don't be fooled by stock market rallies. These are bull runs inside a bear market. And I think we have had that point of view for a while. I think we should keep it. We are going to see a consolidation first before we move up and get into the bull market. And none of the risks are abating. Russia-Ukraine conflict is still ongoing. Oil embargo from Europe is still ongoing. We still have inflation happening. Of course, I shared a good news with you about major retailers having extra stock, obsolete stock, which they are trying to sell at discount prices. That's definitely likely to bring the inflation down a little bit. But overall, the risks are still in place. There are countries which are on the verge of bankruptcy, like Sri Lanka can't buy oil. Turkey, with hyperinflation and low lira, is going to find it very difficult to get oil from Russia, which is its major trading partner for oil. And also it's going to have a tough time getting wheat, which Ukraine and Russia export, and India has put an embargo on wheat exports. So all those things put together, we should not lose sight of the fact that the stock market may be hunky-dory when it goes up. We shouldn't get carried away by the euphoria of the brief rallies that we have. Absolutely be sure that sooner or later people in the markets are going to realize the risks are still in place and the market is likely to drop back. And we predicted that successfully, I think, day before yesterday or yesterday. And today we may have a rebound because yesterday was a down day. That's what I would like to say. So it's always going to be up and down. If you are very, very agile and if you're sitting on the terminal continuously, then you could probably do a bit of scalping here and there, but it's very, very risky. Money can be made, but it needs very quick action and less of greed. Don't try to time the market. Just sell near the top and buy near the bottom. Easier said than done, but some people can do the scalping if they are absolutely dedicated and absolutely focused. And with that, I think I would like to go and have a look at the Nasdaq and other indices and see what they are telling us today. Let's start with the futures. Nasdaq futures are looking pretty good. They are looking positive, 0.67% up from the previous day. And this is the candle for today, the 2nd of June. And you can see it's a green candle, which is supported by the 20-day exponential moving average and also by the 9-day exponential moving average with the bullish MACD. However, we can see that the momentum is just average and flat. So that doesn't give us a very, very clear indication that we are going to be bullish. But overall, futures are looking bullish because it's positive right now. Let's go and have a quick look at the indicators. In the indicators, the first thing I would like to do is to look at US oil. And if we see US oil, yesterday we were talking about the candle, this candle which was forming at that time. It was a bit of a doji candle, and we did not know whether it was going to go up or it was going to go down. It moved within a narrow range yesterday and stayed negative. And today we have a further drop in oil. And as I mentioned in the news article before, this drop could be attributed to the fact that Financial Times published an article saying that Saudi Arabia may pump extra oil to compensate for oil taken off the market by Russia. So that could be the news. How long can it last? We do not know. We do have a minor support coming up out here at 110.26, and we have two supports out here. One is at the 20-day exponential moving average, other is at 9-day exponential moving average. Looking at the MACD, it seems like we're going to break down because the MACD is, though it is bullish, it's almost on the verge of crossing over the signal line and going to the bearish side. The momentum is above average. That's the main problem for us. However, it is pointed downward. That's a good thing. So assuming that oil prices go down, it will be bullish for Nasdaq. However, if they bounce back from the 20-day exponential moving average and continue going up, that will put a lot of pressure on Nasdaq. So right now we don't know which way it's going to go, but the bias and the chance of it going down is much higher than of it going up. So with that said, I'd like to look at the VIX. So VIX, today's candle is this small candle out here. It's a doji candle because people are still waiting for the market to open. It's around 8:10 a.m. as we record this. So you can see that it's a bit early in the day. Our MACD is bearish and tending towards the signal line. Momentum is below average and flat. So it doesn't seem like the VIX is in any hurry to rush up to meet its resistance at 27.20, which is going to be the next resistance, and it's going to be a very strong resistance because it's a confluence of the horizontal resistance at 27.20 along with the 50-day and the 9-day exponential moving average, both of which are in the range of 27.04 and 27.29. So with that said, we also have resistance from the 100-day exponential moving average at 25.93. It's starting to look healthy for VIX, and I usually say that under 20 for VIX, we can have a swing trading market. But I think we are reaching a stage where we should be able to do a little bit of scalping or a bit of day trading, but one has to be very alert. You can't leave your terminal. You have to be on there and probably put automated trades where you buy at a particular price and sell at a particular price and re-enter. So those kind of things can be done for the day, in my opinion, but one has to be extremely careful while doing that. Having said that, let's go and have a look at the US dollar index. US dollar index, when we saw yesterday, we saw that it was it was just picking up, and we said it's not good for the market. But today we are seeing the US dollar index falling down. It has broken down below the 20-day exponential moving average, and it has also broken down just now below the 9-day exponential moving average. And if this trend continues, then we can find support on this diagonal line, diagonal green line, which earlier was a resistance for a bear channel, now becoming a support. And if we continue to come down, it's a positive for Nasdaq. But if we continue to go up, it's going to be a negative for Nasdaq. Given that we have come down from yesterday's levels, I would say that it's a positive, because money is getting out of the US dollar index and potentially going either into gold or Bitcoin or the Nasdaq or all of them. So everything can see a marginal gain today. Also because of the fact that yesterday we had a severe drop. So there could be a dead cat bounce, and we will pick up a little in the morning. We look at the MACD, it is bearish but tending towards the signal line. Momentum is above average, but it's just about to break down. It's pointed downwards, so momentum is not looking great for the US dollar index. And I'm going to look at the S&P 500. S&P 500 is a more reliable indicator of what the market is going to look like, basically because it has got a wider range of shares and it's much more sedate and subdued in its movements, unlike Nasdaq. So if we look at the candle for yesterday, we can see that we had a big drop. The doji candle for day before yesterday was a doubt indecision, and that seems to have been confirmed yesterday as a downward movement with a support from the 9-day and the 20-day exponential moving average, and a resistance at 415.60. I think it's 409. 415.60. So that was the resistance for us, and we respected the resistance perfectly yesterday. What is going to happen today will depend on how the momentum continues. The momentum is just at average and pointed down. If it continues to go down, it will drag the MACD, which is bullish right now, into the bearish side. And if we look at the pre-market action, it's up 0.40. 0.40 is not a very big gain. So I still think that when the market opens, there might be a bit of bullishness, but it may soon give way to bearishness. So we can see this green out here, but it cannot be trusted in my opinion. Now let's go and have a look at QQQ and see what QQQ is doing. So if we look at QQQ, yesterday we had drawn this green line of support. It has respected the green line of support. Yesterday we said that if it did fall, it would get support at the 20-day exponential moving average, and then at 302.95, and finally at the 9-day exponential moving average, failing which it will get support at this diagonal line. So we have been able to predict that correctly. We have respected the 20-day exponential moving average, and for today the market indicates a positive open with a gain of 0.64%, which is around $1.96. So we will definitely have a green opening, but I don't think it's going to last too long, because the momentum here is pointing below average, even though the MACD is up. So I am suspecting that we are going to find a drop out here and test 302.95, or even for that matter 301.06, which is the 9-day exponential moving average, and then we may bounce back. So that's my prediction. I'm still thinking that we are going to respect this diagonal line of support, and we'll see what happens when the market opens. As we can see, the 10-year yield is showing a slight uptick. It's still a doji candle, but yesterday we had a gain. Whenever the 10-year yield goes up, it's good for the stock market, because that means people are more risk on. So if this doji candle develops to be green and starts going upward, then we have a resistance at 3.057. There is a good chance that it could go up, because MACD is bearish but tending towards the signal line. And also the momentum is above average. The only reason why I can't say that it's going to go up is because we have a flat momentum out here that could drag things down. So as we were speaking, the candle became red. So I do not know which way 10-year yield is going to go. But if it goes up, then it's good for the Nasdaq. So in the sum of everything that we have seen right now shows that pre-market people are bullish, but all the indicators are pointing bearish. So I'm thinking that just like yesterday, we are going to have a dead cat bounce. Yesterday everything dropped. after a good pickup in the morning. So there's going to be a sympathy rally in the morning, a dead cat bounce, which will take us green, potentially up to 10 o'clock or something. And after that, there's a good chance that we might go down. But we have also got to see how the market weighs all the inflation issues that we spoke about yesterday, the excess inventory which is being sold on discount, which is likely to push the consumer price index down, whether the market is taking cognizance of that or not, and how soon the market is going to take cognizance of the fact that Saudi Arabia is going to pump more oil, and therefore inflation is likely to be tamped down. We got to see all of these things happen, and we are going to have the consumer price index coming up soon, and that will clear up everything. If people anticipate the inflation is going to go down, then today we can see that the bullishness that started in the morning can persist. But if market doesn't recognize those things, then we can see it give up the gains that it made by the end of the day. So I would be very careful trading today because we do not know which way it's going to go. Now, let's look at the fear and greed index to supplement everything else and see where we are. So as you can see in the fear and greed index, we have come from the low level of 9 and 12 all the way up to 25. So we are finding some kind of relief from fear. We still have a whole long way to go. We have to cross this entire fear area and come to neutral for the market to be benign, and we need to get into greed for us to be into a bull market. So that's a long way to go. We have come out of extreme fear almost. We are almost out of extreme fear. We are at 25. We just need to push further ahead. I do not know whether we're going to go back into the fear zone today or we'll relapse into extreme fear. So I think that overall the market is feeling much better at this point of time than it did yesterday when we were around 12ish. So whether we are going back again to 12 or whether we're going to move up to 30 or something like that depends on how the market reacts to all this new information that we have. With that said, let's go and have a look at our genomic sector. And in genomics, I'm going to sort everything out so that we have the winners at the top. IMTX was a big winner yesterday, and we have gone out of the consolidation range that we had before. So I'm going to draw a new line out here, new trend line. We are looking at 8.17 pre-market. So I'm going to wait for drawing the new trend line, or rather I would like to put a resistance in place which would sustain the market going forward. I think that resistance is going to be here. This is going to be a minor resistance. So I think today we are looking at a resistance of around, so one level of resistance is going to be at 7.98, and the next one is going to be here, which is at 8.33. Right now we are at 8.17. The MACD is bullish, momentum is above average and pointed upwards. Everything is looking great for IMTX. At least the morning is going to open positive for IMTX, and after that we'll see what happens. Let us look at any news that IMTX has which gives it. So here is the news that is making IMTX look good. IMTX swings to profit in Q1 as revenue surged on upfront license payment. So revenue for the quarter ended March 31 was 102.9 million euros, up from 7.4 million euros a year earlier. The increase is mainly related to the recognition of a one-time upfront payment for license portion of the company's collaboration agreement with Bristol Myers Squibb on IMA 401, its T-cell engaging receptor. Analysts expected 138.9 million euros, so they have beaten on that. So that's what is pushing IMTX above, according to the news article out here. So IMTX will definitely see a positive going forward. And is there another news article out here 28 minutes ago? IMTX Bristol Myers Squibb expand collaboration to develop allogenic cell therapy programs. So yeah, this will be a subject for another video. So these are all positives that are going in for IMTX, and we are going to see it break through some of the resistance out here and settle a bit higher at the end of the day, in my opinion. Let's look at Vertex, which is the next one up. It has unfortunately broken down from this diagonal line of support which had multiple supports. So I'm going to remove this diagonal line from here and move it down here and see what happens going forward. Today we are pre-market up around 1.65% at 273.86. So we are likely to still respect this diagonal line, and our MACD is bullish but tending towards the signal line, and momentum is above average and almost flat. So Vertex may fall further today. We do not know. I think that it's a good thing if Vertex falls, so that we have a line of support which is somewhat like this, and that will be good because the 100-day will also merge with this line. Ideally, I would like it to be around here, but right now I do not know how it's going to go. I'm just going to remove this support line, and we'll see what happens when the market opens. Caribou Biosciences. It ended yesterday with a doji candle, and it bounced back from a support of 8.25. The MACD is still bullish, but the momentum is just at average and flat, and there is no pre-market trades. Let's look at CRISPR Therapeutics. It's down minus 0.31%, and the candle from yesterday was a doji candle, a lot of indecision. The day before was also a doji candle, which was all indecision. So there is some kind of consolidation taking place today, and pre-market CRISPR is already up 1.59%. It's sitting at 59.46. So we seem to have cleared some kind of a resistance that was up here. If I draw a trend line out here, there seemed to be some kind of a resistance up here, and that seems to be cleared up. Further, if we were to try to see some patterns out here, I think I could probably draw head and shoulders. This is one shoulder, this is the head, this is the next shoulder, and then you could probably have the neckline somewhere out here. So I think that there's a good chance that if this head and shoulders were to manifest, that we are likely to break above and have a rally. It's an inverted head and shoulder, so we are likely to go for a rally for CRISPR. I think I'll wait for the market to open. Today seems to be an ideal opportunity. Let us see whether we can break through the 100-day exponential moving average, which is the next resistance at 62.46. And let me look at the news for CRISPR Therapeutics. There is no new news, so there is no catalyst as such to the best of my knowledge. So the chances are that CRISPR Therapeutics is likely to open positive, but it may hit a resistance and then come down again as the day progresses. Somewhere around 10 o'clock in the morning, we'll get a clue which direction the market is going. Regeneron is down minus 0.88%. Yesterday's candle fell down before the previous day's lows. So there is more sign of weakness for Regeneron. It's being supported by the 100-day exponential moving average, whereas all the other three exponential moving averages have become a resistance. So Regeneron is looking weak. MACD is also tending towards the signal line in a bearish manner, even though it is bullish right now. And momentum has already fallen below average. So Regeneron is likely to lose more value today. And I can see that pre-market there are no trades, so the enthusiasm level is also a bit low. So momentum likely to fall further. Pfizer is down minus 1.26. It has gone down below where it was yesterday. And then it bounced back, trying to recapture the support which was there, which was this red line 52.48, but it continued to be a resistance, and we stayed below that. However, we were able to get support from the 20-day exponential moving average, from which we neatly bounced back. We touched it and we moved up again. But for today, the momentum seems to be pointed downwards, and pre-market also we are down minus 0.13%. The MACD is tending towards the signal line in a bearish manner. So given all those things, I think that we are going to retest the support at 20 exponential moving average, which happens to be at 51.85, and then we have support of the 50-day exponential moving average, which is this fluorescent green line, which is at 51.34. Let us test those two supports today. Novartis is down minus 1.43%, and pre-market it's up 0.33%, but we have resistance which is going to be this green line at 90.63. Mark that as a resistance because we fell down yesterday. And our next support is going to be at 89.53, which is this horizontal green line, and also the 20-day exponential moving average. We bounced off the 20-day exponential moving average, so that's a good support for us out there in case we decided to fall below the initial horizontal support. And then we have the 50-day exponential moving average to provide us support. So all these things put together are going to be giving this notice a support today. If we look at the MACD, it is tending towards the signal line in a bearish manner. Momentum is also falling fast, even though it's above average. Only factor that gives me a pause is the pre-market. It's up positively, but everything indicates that the positive open may give way to further falling prices. Again, the caveat still remains that if the market recognizes that Saudi Arabia is pumping in more oil and that big retailers are still having excess inventory and obsolete inventory which they are trying to sell at discounted prices, and that will bring down the CPI. If those recognition comes in, then we will see a rally. There's also another reason for us to have a rally, because yesterday was a very bad day. So overall, if I take all of those things into balance, and the fact that both Pfizer, Novartis Pfizer, Novartis, and also Vertex are companies which have got positive revenue flow. I think those companies are likely to stay green today, and most of these genomic stocks which are red are likely to start off green and have a little bit of a bounce before they change the trend. I think today is going to be a green day for all the stocks on balance. So with that said, I want to look at IDNA and see where it is at. IDNA is still range bound, and this was yesterday's candle. We came down below the 9-day exponential moving average and also below yesterday's candle, and we have bounced off the support, which is this diagonal green line. So I think that we are likely to touch this green line and go up again and face resistance at 29.42, which is this minor support, which is the horizontal red line. There are no trades so far to give us any clues. The momentum is below average and pointed down. MACD, even though it's bullish, is tending towards the signal line. So I think first we're going to move down and then bounce back up again. We might probably end the day green unless any negative catalysts happen, because right now pre-market catalysts are all bullish, and also the fact that yesterday we had a very bad day is going to push us towards the positive. So as you can see, everything is confusing at this point of time. Volatility is also coming down a bit. We saw that we are moved away from extreme fear to fear in the fear gauge. We had a very bad day yesterday with a lot of falls. So I would like to end by saying that my conclusion is that the market psychology would dictate a bounce back because of yesterday's fall. And I would also say that the economic factors that would support a bounce back upwards is the fact that Saudi Arabia is rumored to be considering pumping more oil to compensate for the oil that has been taken away by the Russians. So that's a positive that's going to relieve the inflation. The other positive for us is the excess inventory, obsolete inventory, which the big retailers are trying to liquidate. That's also likely to bring the consumer price down. If these two factors are considered along with yesterday's steep fall, then we are going to see that the market is going to go up. But I would like to caution you that the market participants are not always as smart and as alert as we think, because yesterday's fall also indicates that the market did not recognize the fact that excess and obsolete inventories are being sold at discount, and therefore it's going to be a downward pressure on the consumer price index. So keep those things in mind and be careful when you're trading. There's a possibility for scalping or doing a bit of day trading out here, but it needs extremely close attention to what's happening in the market, because you're talking about 5 cents or 4 cents here and there. It's not for the retail investor, it's for some experts who are used to doing those things. And if you like this video, please press a like out there, and it can help our channel to be seen by other people in the YouTube universe. And if you are not yet subscribed, please subscribe and join our community for everything related to CRISPR. We have been stuck at 495 for a while, so I really implore you to subscribe if you haven't done so, and push us past the 500 so that we can go ahead and do better things. Thanks and have a great day. Bye for now.